Professor Barth. Thank you for joining my channel today. I'm really excited to have you on and hear some of your thoughts on the current monetary system. Just to introduce you to my audience, Professor Barth is Associate Professor of History at Arizona State University and holds a number of other positions as well. Mostly speaking truth is the way I would characterize him. Dr. Barth, would you like to tell people kind of what your the different aspects of your career?
Yeah, so thank you very much for having me. It's an honor. Appreciate it. I graduated from George Mason University in 2014 with my PhD and came on board here at ASU. Got a really good program actually in the history department that is bringing ideological diversity to campus. And I've got a great colleague, Donald Critchlow, who functions sort of like my mentor. And we recently established within the university a new center called the Center for American Institutions, and we're all about strengthening those core institutions in this great country of ours so that we could preserve liberty for ourselves and for our posterity.
Oh, wonderful. And I think I've mentioned to my audience before, I have audited your series on the history of money. And I found it just fascinating the way that you take us back through time to the beginning of when silver and gold, for example, were transacted for goods, and all the way up through current times. I know you have opinions on what is going on right now. We are a community of silver and gold, precious metals enthusiasts. To some respect, we are dissidents to the current economic monetary system.
Yep.
And so that's the vein that I'm exploring. I'm just gonna, I'm just gonna head off with some questions and try to let you do the talking. I talk
Sure.
way too much. Are the banks in trouble right now?
Yeah.
Banks, big banks.
Yeah, absolutely. Actually, before I answer that question, may I comment on what you just said
Uh-huh.
about the context and background of your audience and yourself? I actually got into monetary history from the 2008-2009 financial crisis, and I was a big follower of Ron Paul, and that's really when I got into Austrian economics. And in the lead up to the 2008 crisis, watching, at that time, Congressman Paul warn about the coming bubble and about the dollar, just really got me thinking outside the box. I had never thought about currency and money before, or banking. I had heard of the Federal Reserve. This is like 15 years ago. I'd heard of the Federal Reserve, but you're not taught about this in college, and I knew nothing about it. And it just really piqued my interest. And being at the time, a history major, it was just natural for me to want to, okay, like as I became more interested in money and banking in the current day, what happened earlier in history? And there's just this rich history of money and banking globally, but also the United States. And Jackson and his war on the Bank of the United States, William Jennings Bryan. My second book, which I'm working on right now, is the hyperinflation during the American Revolution.
Mhm.
Just really big problems. So anyway, that's what really got my interest. And I'm a big fan of silver and gold. And I think actually to go back to your question about the banking system, one of the reasons why the banking system is so weak right now is because they have bad assets, unrealized losses of these, with SVB, of course, it's well known that they had these treasuries on their books, and they had bought all these treasuries at these very low rates. And it's fine if you can keep them to maturity, but if you have to liquidate it, you're in trouble. And we saw that in 2008 too, with just junk assets. And so, I mean, imagine if SVBs, so the conventional narrative right now is that banks like SVB, when deposits increased during the COVID QE, in 2020 and 2021, they didn't know what to do with all the money. So what they do, they put them in treasuries because that's the conventional safe bet. Imagine if they had put it into gold and silver. They would be sitting fine right now. But that's not what our elites tell us you should do with your money. They want you to invest in government paper. And but imagine if they had invested in gold and silver instead. Gold and silver actually have done fairly well over the last 3 years. If you look at how gold and silver have performed compared to the Dow, for example, gold and silver have both outperformed stocks. Silver's gone up something like 40% since the outbreak of the pandemic. Gold's, I mean, flirting with $2,000 an ounce right now. So I think these financial institutions, they just have a lot of it. They're not sound, and in some cases, like SVB, pursuing. They have their priorities all out of whack, and they won't have a risk assessment manager, but they'll have wokeism. So the banks are in trouble. Powell is in a rock and a hard place. He raised rates by a quarter earlier this week. He doesn't have a choice; he has to. But if this contagion continues to spread, there's a lot of talk about Deutsche Bank right now, and Credit Suisse had to be bought up. If this contagion spreads and there's a real economic crisis along 2008 style, Powell, there's just going to be immense pressure on Powell to inject not only reduce the federal funds rate, but also to inject new rounds of QE. What does that mean for the dollar? So there's so many problems right now. This was predictable. This should come as a surprise to nobody. Many people saw this coming, except apparently our expert class.
Right. They do like to tell us what to do and make decisions for us. Now, we know the regional banks are in trouble, and you might even make the case that the government is trying to put them out of business in favor of the large banks. But really, should we be concerned about central banks around the world? And the contention is that we are pretty strong in the US, but around the world, their central banks are even weaker, having gone to negative interest rates and such. So is that contagion manageable in any way other than printing more money?
Yeah. Well, the dollar appears to be the least weak of all the fiat currencies. But I mean, look, so a couple of things on central banks. Central banks would love to adopt CBDC, central bank digital currency. I think that's absolutely on the agenda. And you can't get CBDC unless you have a crisis. And so, there are a lot of people out there who are asking questions, and I don't think inappropriately, is the end game here central bank digital currency? Because remember, when you draw money from your bank account, when you use your debit card or even a credit card, that's a liability on the commercial banks. The Federal Reserve with CBDC, central bank digital currency, would be a liability of the central bank, and you would be dealing directly with central bank money as opposed to commercial bank money. Cash is also technically a liability of the Federal Reserve, but it's untrackable, it's anonymous, and so the system really doesn't like cash. And so CBDC, I think, is something all the central banks are very interested in. This they've compiled reports about how to transition over into CBDC if they were to do that, and I think CBDC would be a tyrant's dream. As far as the strength of the dollar vis-a-vis other currencies, yeah, I mean, we live in a fiat world, but take a look right now at the debt to GDP ratio in the United States. We are, it's at about 125%, which is extremely high. Okay, we do have the world's largest economy. I think we're something like a quarter of the world GDP, but with a debt to GDP ratio that high, Compare where we are now to Paul Volcker. A lot of people are talking about Paul Volcker right now because, you know, Volcker hiked up interest rates in the late 70s, in 79 through the early 80s. The debt to GDP ratio when Volcker was Fed chair was 35%. Okay. And so there's a lot of debt, and this is a worldwide problem. So maybe, I mean, this is a global phenomenon. It's not just the United States, but in the United States, we just have so much debt. The national debt's over $31 trillion. Credit card debt's at an all-time high. It's close to $1 trillion. Auto loan debt, I mean, you name it.
Right.
And then that's not to mention the unfunded liabilities like Medicare and Social Security, which nobody has a clue what to do about. And
Right.
so, you know, the dollar, yes, it's the, you know, other currencies aren't doing well either. And now's not a bad time to travel to Europe if you're an American, okay. But, you know, the US dollar is not in a position to remain the world's reserve currency for long as things currently stand. Again, I think a crisis, a real financial and currency crisis could have the effect of issuing in a new monetary era dominated by CBDC and maybe regional or even a global currency, although global currency is less likely because of all the geopolitical rivalries right now, but certainly regional blocks could adopt currencies. So, you know, I'm not very optimistic actually about the US financial situation.
Do you think that there is any way to fix it? And I know that involves controlling spending, but in your mind, will we be able to make a dent in this debt, or is it impossible? Are we already on the exponential curve?
I don't think it happens absent a major crisis to kick people in the rear end. I mean, what do you do about entitlements? Nobody wants to touch it. Like, I mean, for 2024, like nobody would recommend that the Republican candidate, whether it's Trump or DeSantis, you know, campaign on entitlement reform. Why would you do that? It's going to kill your campaign. And so but like, obviously, like this isn't sustainable. So we're in this very, I don't think that there's the will to fix this. We're hooked on spending. We're hooked on cheap money. And so I think America and the West is just going to have to learn the hard way. It's not just the West. I mean, China is in terrible shape too. I mean, it's, you know, there's a temptation to overrate China as far as how China is doing. I mean, China, yeah, they have the #2 world GDP, but if you look at China's GDP per capita, Mexico has a higher GDP per capita than China does. And then China's got this massive real estate bubble. So, you know, and they're communists. Okay. I mean, they do have, I mean, let's not forget, communism doesn't work. I mean, people thought the Soviet Union was strong in the 1960s and 1970s and it collapsed. So I'm not, you know, I think China its economy is really not that much better. But the United States is in serious trouble, and we don't have the will to do what needs to be done. This is a weakness in democracy. There are strengths about about democracy. I teach a class called Foundations of Democracy. And we talk about the strengths and weaknesses of democracy. And political thinkers dating back to the ancient Greeks debated this. And one thing that, you know, you have the strength of self-government and a check by the people on public officials. One weakness, however, is that difficult things that need to be done, it's a tough sell. And then people demagogue it, you know?
And there's such a lack of understanding of what's going on out there. I rarely meet a person who follows what's really happening in our world. The thing I wanted to ask is, you know, I think Powell is his motive here is to create recession, and that may be the only thing that saves the debt crisis. Would you agree with that statement?
Yeah. No, there needs to be a correction, and the problem is he needed it, and I don't know what I don't know, you know, what his intentions are and his motives and all the rest. I mean, he could be completely well-intentioned. Okay, I don't know. What I can tell you is that he responded way too late to this problem. Okay, and because look, I mean, it wasn't until the Fed was doing QE through early 2022. Okay, I mean, like, and Powell was saying this was transitory as late as fall of 2021. and so, it's they played this game for too long. They're slamming on the brakes, but we need a correction. And speaking of demagogues, I don't know if you saw this, but when Powell was on the Hill, he's questioned by senators. Elizabeth Warren, grilled him, and, well, you say, unemployment's like 3.5% right now. You say that, unemployment may need to go up to 4.5%. Look into the camera and tell those 2 million people who are going to lose their job that's worth it. I mean,
Yeah,
it's
right.
stuff like that. Like, how do you get anything done with that sort of rhetoric? But yeah, there needs to be a correction. It's ridiculous. And see, these prices are, I mean, or look at the housing market too. I mean, it's system wide, and I think it's going to be a harder correction in 2008.
Oh, you think so? That was a big
Yeah,
problem.
I think it's going to be, it's more systemic than even in 2008.
Wow.
We've
Wow.
been living off the hog for over a decade with cheap paper. And again, I keep going back to the debt to GDP ratio. Debt to GDP ratio in 2008 was 60%. Again, we're 125% now. It's just we're in a different world now than we were during the late Bush years.
And I hate to see the misallocation of taxpayer money. I would say back to Elizabeth Warren, why did you spend so much money bailing out the Teamsters pension plan in your Inflation Reduction Act? I mean, nobody ever gets called on their profligate spending, but we just take the punches and don't punch back.
Yep, yep. It's Republicans have been like that for a long time.
And I heard you say on your last video that in universities, or maybe it was your university, the ratio of Republicans to Democrats was 35-1 or something.
Yeah, yeah. 33-1. There was a study of the top 100 colleges and universities across the country, and yeah, in history departments it was 33-1. That wasn't the worst. I think sociology is the worst. It's like 90-1 of registered Democrats to Republicans, because that's public info, and that doesn't include independents, or probably mostly Green Party, so it's probably even worse than that. Economics in the universities, economics is the most even, and even there it's 4-1 Democrat to Republican.
Wow. And are most of the Democrats in favor of the current monetary policy?
I haven't, so I'm in the history department here. I haven't had a whole lot of conversation, or any conversation really at all, with any of the economists here at ASU, just because I don't see them. Most of them, I would presume, are Keynesian or neo-Keynesian. You get a few wackos out there. I don't know if there are any like this at ASU, so, but modern monetary theory. But that seems to have been fully debunked.
Oh, I hope so.
Yeah,
But
yeah, you would think.
so we talked about gold and silver a little bit. What do you think the future holds for gold and silver in relation to kind of continued problems with spending and inflation and whatnot? Do you think it will catch a bid?
Yeah, no, I mean, gold and silver are going to have value for as long as human beings exist. Okay, I mean, like, they always have. I mean, like, you look, it's been thousands and thousands of years. I mean, it turns up, they turn up in archaeological digs. It's it's in the book of Genesis. One thing that I point to in my classes, for those who doubt that gold and silver have intrinsic value, that there's something inherent about those two metals that human beings are drawn to. When Columbus came to America and he met the Indians and the peoples there, guess what? They had gold and silver. They valued it. Okay, why? It's beautiful. It's and it has certain qualities about it that sets it apart from other metals, but certainly from all other commodities. There are a list of various qualities and traits to gold and silver that make them ideal for money. And so, look, if human beings are still around in 500 years, okay, I can't tell you anything about what that world's going to look like, but I can tell you one thing: gold and silver will still have value. And so, we can't predict the you know, the day-to-day or even year-to-year movements. Markets often act irrationally. In 2008, people flocked to bonds when the system began to teeter, and gold suffered. But ultimately, in the long run, if you want to preserve your wealth, I think if you look at price graphs for gold and silver and you zoom out 15, 20 years, you'll see that for wealth preservation, you can't really do better than gold and silver. Okay. And so now, as far as speculative asset, probably not. Okay. It's not really good for that. I mean, you could try, but I did a little bit of that. I don't know if you remember, but back in what was it, like 2010, 2011, silver hit $40 an ounce at one point. Price kind of went berserk, and I actually timed some buying and selling pretty well. And but that's a different. But for wealth preservation, I think they're second to none. And there are other ways to preserve your wealth. I tell people firearms are always going to have value. That's not a bad way to store your wealth. Some people say land. That's a little iffy because you have bubbles, in land and real estate. But maybe, anything that's real, anything that's hard, I would not store. To your viewers, I doubt many of them have this, are intending to do this anyway, but I would not store significant sums of wealth in paper or in assets that could very easily lose value and have no intrinsic value in and of themselves.
Well, I think the majority of my audience agrees with that, but then we've got the conundrum of how much of your money to put into precious metals. And I always advocate under 15%, probably under 10%.
Yeah.
And then you're left with the other, let's say you have a 401k, you're left with the other 90% and what to do with it. So not to give investment advice, but I don't find the stock market a attractive option right now.
No, yeah. But yeah, you're right. You need a diverse portfolio. People get really skeptical of this, but I actually think Bitcoin and Ethereum are still okay, like investments. Don't put all your eggs in one basket. And certainly those Bitcoin and Ethereum are don't measure up even close to gold and silver as far as like hardness. But I would be surprised if Bitcoin and especially Bitcoin did not continue to have significant value in 50 years from now. Honestly, I think it's got a permanency about it. It can't be tinkered with. You can't have some arbitrary board coming in and changing the quantity. And it has one really attractive thing about Bitcoin is the fact that it's sort of like the cash of the internet, and we live in a digital age. So have a diverse portfolio, gold and silver, have some Bitcoin, maybe if you're so inclined. Yeah, sure, have some money in stocks. Because as inflation goes up, the nominal value of your stocks will go up too. Okay, so you could do well. You could still do well in the stock market, especially if you think a certain industry is about to do really well, or there's a company that you think is undervalued. Sure, invest. Okay, but yeah, have a diverse portfolio. But I think precious metals should be a part of that as a safe haven. I don't like bonds, and there's a temptation right now to invest in treasuries because the yield is higher, but who's to say it won't continue to go? It won't go even higher than that. And then,
I think it's worth distinguishing between long-term bonds and short-term bonds. And that's what I'm doing is I'm investing in short-term treasuries. Some short is 3 months and up to 2 years, but you can hold to maturity.
Mhm.
just like the Fed is doing with their new lending facility, right? They're going to take all that crappy debt and hold it to maturity.
Yep.
I wanted to, since you brought up Bitcoin, this question spans Bitcoin and gold and silver government regulations. So, can Bitcoin be suppressed through government regulation? Can gold and silver be suppressed, not through the government stealing it,
Mhm.
like FDR did? But do you see the government getting involved in our hard assets?
Yeah, it's governments will certainly try. They've shown that historically. As far as Bitcoin is concerned, the exchanges is what they would target. If you know how to use Bitcoin correctly, it's easy to use Bitcoin without any government knowledge, actually. Um, you know, don't store your crypto on an exchange. Um, you should have it on a either digital or a hard wallet. Even you can store it on a hard wallet. And so don't go through the exchanges. The exchanges can be regulated. I mean, I think Kraken recently had to come up with a settlement with the SEC, and so they can target the exchanges. Gold and silver, yeah. I mean, you mentioned FDR. I mean, FDR made it illegal to own it. I mean, now a lot of people just didn't obey that law, but there were prosecutions.
Right, but then you had 50 years where you were afraid to take it out of the safe, right?
Yeah, yeah.
So I don't wish for that because I'd like to be able to trade mine freely when I need to buy property or whatever. So we fear that, or at least I fear that.
Look, we're dealing just with hypotheticals here, but like, let's say in a hypothetical scenario, inflation were to get really bad and people in in mass were to begin, so-called hoarding gold and silver, and the price of both metals went completely berserk. Um, does anyone think that the government wouldn't pull an FDR part two, and try and do that all over again? Of course they would. There would be an effort to suppress gold trading, because that would be seen as destabilizing. When in reality, it's people protecting their wealth and doing what they can to get out of paper.
Yeah, as Nixon said, the speculators, we have to control the speculators.
Yep.
So,
Yeah, that was
well,
funny.
I don't wish for that. Now, for the audience, I hope that you will click on the link below and subscribe to Dr. Barth. He has got really level-headed and honest opinions on what's going on. I'd also like you to take a look at his series, many of his different series on the history of the world and also money. It is really worth your time, and I wish there were classes like that when I was in college. I really respect what you're doing, and I also appreciate you putting it on YouTube. We I don't imagine you have to do that. You're doing that probably of your own accord.
Yeah, so I had thought about it for a long time, and then when COVID hit, we moved online, and I had my history of money class in fall of 2020, and I decided to go ahead and record the full length lecture videos, and so why not throw them on YouTube and get an audience? And so really glad that I did that. It was fun and ended up reaching a much larger audience than simply 100 students in a classroom. Although I love that too. I love seeing the face to face. There's as a teacher, you really feed off seeing the physical students in a classroom. So that's not really replaceable. However, it's nice to throw it on the internet and allow anybody who's interested to watch it.
Well, I think you've got a talent for it, and I know you put a lot of effort into it because you'll also include, images of famous people and the things that you're talking about. So it's not a dry lecture. It's very very interesting.
Thank you.
Yeah,
Appreciate that.
you bet. So I really appreciate you joining me. And again, everyone, please subscribe to Professor Barth and see what he's got to say. You'll find very honest dialogue. I'm sure you can't say everything you want to say, but he usually gets it right. And I think he's one of us, actually.
Yeah. Well, I try to be as real as I can with people. It's real. It's important to me, and um, I I received tenure last spring, which is nice. And so I think having an honest relationship with my students when it comes on ground classes, but also with the viewers on YouTube is really important to me. So I try to say what I think as intelligently as I can. But thank you very much.
You're very welcome. Thank you for joining me, and we'll release this video Sunday morning.
Okay, great.
Hey, have a great rest of your weekend.
You too. Bye.
Bye-bye.